Welcome to ShortView Trading, so your morning market hit for Monday, 24th of May. What matters today and this week for traders? So there's clearly a lot worrying people at the moment. The price action of Bitcoin was a case in point last week. So are the reports that companies are struggling to find workers to hire without putting up wages quite meaningfully. Or indeed the core CPI print we had coming in at 0.9% month on month not that long ago. So the real question we've got to ask ourselves today, are markets resilient or are they rolling? But really you want to stand back from all that market chatter and start looking at the price action. What is the price actually telling you? This is the first place you want to start when you're thinking about implementing 1 to 2 week equity index trades. And as I look at it, markets continue to hold pretty key levels. Let's take a look at the S&P 500, the key US equity market barometer we're putting up in front of you now, holding its 50-day moving average, having tested it a couple of times over the past couple of weeks. That's encouraging, holding that uptrend, holding that 50-day moving average. Or equally, look at the MSCI Global Equity Index that we're putting up in front of you now. The global, across the board equity index of developed markets, again, holding its 50-day moving average, very encouraging. Or indeed, look at Bitcoin. Yes, there was a lot of dramatic price action in Bitcoin last week. It fell pretty sharply. It was troubling if you're trading that asset class, but actually it held its 200-day moving average and generated what looked like capitulation in the middle of last week with V-shaped price action on very heavy volume. So actually, when you stand back from the market chatter, there are three good reasons, in our opinion, why the market's going to trend up over the next week or two, and moving long equity index futures is advisable. Firstly, as I just described, the price action's impressive, the market's holding key levels. Tick, that's encouraging. Secondly, the behaviour of volatility is also encouraging, making lower highs in the last few weeks after its initial spike higher, whether you look at the VVIX or indeed the VIX. That's also encouraging. And thirdly is the positioning of our short-term market timing models. We have tons of models that we like to use on a 1 to 2 week basis to help time entry and exit points from long and short trades. And most of those models have been building up to, generating, moving towards, putting in quite nice buy signals over the course of recent trading sessions. So for example, look at the put to call ratio in front of you now. The market's been putting on a lot of downside put protection, hedging itself to the downside, which is a great indication that there'll be some short covering fuel there. In other words, as this rally continues, market participants will unwind those put positions they have in portfolios. They'll be buying the market to unwind them. To close a put, you buy the market effectively, and that adds fuel in the short term to the uptrend. But secondly, look at the market technically. If you look at an equity index technical short-term scoring system here, we show you the one for the S&P 500. You'll see the market was oversold not that many trading sessions ago, and it's starting to work its way higher from that oversold level, but really hasn't moved up too much and certainly isn't overbought. So plenty of headroom to the upside on that model. Or indeed a third model, for example, if you look technically at the market, not on an index basis, but on a single stock basis. Here we have a model in front of you now that shows you how overbought a range of 2,000 to 3,000 stocks are in the US. So a lot of single stocks are in this. We then aggregate the signal and we look at the RSI of each individual single stock and aggregate all those and come up with this reading. The important point is you can see it gets very high just before pullbacks, and at the moment it's very low, which is typical of a buy signal and a market that's got lots of room on the upside in an uptrend on the next week or two. Single stock, that single stock model very much supports that. So from a price action, a volatility and a models perspective, this market looks good for the next week or two. So to see exactly how we're playing this and for our daily update on our models and our market views and our thinking and our recommendation on equity index futures, please see our daily rag. That's available to subscribers via the website, or if you'd like a free trial of that, please click on the link below, put in your name and email address, and we'll send you the daily rag for free for 7 trading sessions. No credit card details required. So what are we watching this week? Well, there's a few themes playing out. In Europe, there's a big focus on German IFO, comes out on Tuesday. That's always watched closely. And then consumer confidence across Germany, France, Italy, and indeed the Eurozone throughout this week. Equally, we have a speech from ECB's Christine Lagarde towards the back end of this week and a G7 finance and central bank governors meeting. Elsewhere in the States, lots of bits and pieces of data, including durable goods orders, Chicago PMI, and personal income and spending, amongst many other bits and pieces of data on the macro side out of the US, whilst over in Asia it's pretty light this week. A little bit of Chinese industrial profits, not that much more than that. So that's it from us. That's your morning market hit for Monday 24th of May. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading and click on the subscribe button. Please also like the videos. We'd appreciate that. Or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.